Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Now, before we hop into the charts, guys, let's take a quick look at the news that came about today, as well as take a look at what news is coming later this week. So starting off today, we did have Jerome Powell speak to the congressional body today, and he did start off quite hawkish, at least early in the morning when he came to talk, and then as he kept on talking, answering questions, he did slowly get more dovish throughout the day. Now, if you watched yesterday's recap, you heard me warn that it was very likely we were going to have a hawkish tone in the beginning of the day as he spoke, and we were likely going to see some downside. Now, we got that downside. It did outperform my expectations. The dollar got much stronger, much faster than I expected, but overall, it did follow the pathway that was most probable. So we now have what's likely a clear line of direction for the markets, at least this week. So I was happy with how today played out, as it did put more clarity in the charts for me. So I am looking forward to the rest of this week, as I do think we have a clear understanding of what to expect. Now, after today's news, we're looking for tomorrow to pretty much give us the U.S. trade balance numbers. Fed Powell will speak again tomorrow, and the employment change numbers as well as crude oil inventories. Now, crude oil inventories are important, obviously, for oil, but you won't see them affect the markets, at least immediately. This will show us potential rises or decreases in price for goods. So you do want to keep your eye on this, because if the oil price goes up, goods and transportation will go up. That's just how it works, okay? Now, after tomorrow, we have on March 9th, the initial jobless claim. So this is going to be very important. Are we going to get more jobless claims? Are we going to continue to increase joblessness, or are we going to continue to show strength in the economy and people having more jobs, so less jobless claims? So we're going to keep our eye on that. And then March 10th, we have the unemployment rate and non-farm payroll. So this is going to be big volatility at 8:30 a.m. Eastern time in the US. Big volatility on March 10th. So you definitely want to mark this on your calendar, okay? All right, guys, so now let's hop into the chart, see what's going on. So as you can see, the dollar had one hell of a day today. As expected, it was expected to get stronger, at least to me it was. This has been much stronger than expected. I was looking for a move back towards 105. I did not think we were going to move well beyond 105, getting to 105.6. So this has been extremely strong, but it is coming into the zone that I had been looking for to get to, the monthly bearish fair value gap. So we're likely going to, over this coming week, trade up into this level, and as we get into this big zone here, we're likely going to start showing signs of slowing down. Now, that may be around 106, or that may be around 107 to 108 almost, okay, as we come into this descending trend line. Either way, as we come into this general zone here, watch for the dollar to start to slow down, and then, like I've been saying, pull back, and we're likely going to try and build out a higher low after taking out this low right here. Okay, so after taking out 104.163, there's going to be an attempt to try and bring out a higher low from this low here, and then have continuation to try and break this descending trend line. Now, this is the most probable path currently. This is what's likely to happen. Now, it is possible that we just zoom through and the dollar just continues to get stronger and stronger and stronger as the markets continue to sell off. That's the least probable path, but this is the most probable path. And as we get to these levels down here, we're going to have to watch the price action and see what the bias is and the context. So as that becomes clear, we'll know what the probabilities are for this descending trend line to either be broken or visited at some point, okay? So keep our eye on the dollar chart, and make sure, if you want to get up-to-date notifications on this stuff, make sure to join the Discord. It's a free Discord, and you'll often get to sit in on live streams I do, as well as just get me posting stuff about the charts, and it may keep you up to date if you're having trouble staying up to date, okay? Next is the Dow. So Dow's been playing out as expected. Again, the sell-off has been beyond expectations, but we're ultimately getting to where we've been mapping it out, right? So it came back down towards 32,441, and then pulled up back towards this bearish fair value gap and back towards the symmetrical triangle. It broke bearish, failed off of that, and now had a nice rejection, and we're likely going to start looking to break past 32,441 and then go lower towards these fair value gaps. However, after such a drop like this, do not be surprised if you do see some sort of consolidation prior to the drop here rather than just a major continuation. If the dollar does continue to get much stronger, let's say tomorrow's session for the US markets, then you'll probably see another stream down, but it's more likely you do have somewhat of a slowdown over the next day or so and then continuation lower to really attack these lows down here and grab the liquidity under them. And once you take those lows out, do not be surprised if you have another minor little pop up and then a breakdown again to come back down towards these fair value gaps. And once we come down to here, we must be on alert for a higher low structure to start forming from these lows, okay? After taking out these highs, we are now looking to see, will the Dow have a change of character structure where we made, you know, lower highs, lower lows, made the low, and then made our first higher high from this lower high. Will we make a higher low now for continuation to the upside? So that's what we're looking now for on the Dow, as well as the S&P and NASDAQ. So S&P, same thing, came into the bearish fair value gap, now is looking likely to come into this general zone at 39.50, potentially all the way down towards 39.20, 39.18, filling out this bullish fair value gap and then tapping under these lows. And we'll see probably a similar structure to the Dow where we will break down and then pull back up for a slight rise and then probably break down once more, going down towards the 3,800, 3850 zone, really looking to attack this consolidation right here. Okay, so I am looking for more downside generally, but we may get some pockets of little upside in the markets here. Same thing, NASDAQ came right into this bearish fair value gap, tapped right at the low of this green zone, and this looks very strong to break down towards this level right here, coming after the daily sell side liquidity right under this level right here. So I'm looking for price to get there pretty quickly, you know, over the next coming days, maybe early next week if the dollar does continue to strengthen, and then pop up from there and probably make another lower high structure and then pull back further into this bullish fair value gap. Okay, so again, same thing, same structure is probably forming on both NASDAQ, S&P, and the Dow. So I'm liking what I'm seeing as the path is becoming clear. I'm looking for short-term downside overall, and then we may get some pockets of low upside swings here and there. And then once we get towards these lower levels, these fair value gaps on both the NASDAQ, S&P, and Dow, we're going to be looking for higher low structures to form and potential larger moves to the upside. Okay, so next is oil. So oil's been having a couple bullish days, and then boom, hard denial off of the major strength of the dollar, right? So oil will go up as the dollar goes up, but when the dollar goes up rapidly, that's when oil will have, you know, major moves inverse to the dollar. Now, if let's say the dollar kind of stabilizes here at this level, you'll probably see oil slowly continue higher. This is just the nature between them, as remember, the dollar is the world reserve currency currently, and it's the currency you need to buy and sell oil with. All right, so this will follow the dollar's pricing, but however, when it gets too volatile, it will inverse to the dollar. So we're going to watch this probably strengthen out still as we come a bit lower potentially. If the dollar is going to strengthen out even more tomorrow and not stabilize, you'll probably see this breakdown again coming back towards 75. But if it does stabilize, watch for oil to kind of grind higher. And in my opinion, it still looks good, especially when you look at the larger time frame, to come into these levels around 85 and potentially significantly higher. Okay, next is gold and silver. So gold, again, because the dollar strengthened hard, both gold and silver are going to sell off pretty hard. Came right back into the level 1807, 1812. So we're trading around the zone that I think it's going to be trading at for a little bit longer, but we are making headway to breaking this level and going significantly lower, probably towards around 1750 to 1740. Okay, so this zone here at 1800 is very, very attractive. So it is going to take some time for the demand to be broken through. So you are probably going to see a larger consolidation around here and then break down further to these lower fair value gaps, these bullish fair value gaps here. And it's very similar to what we're looking for on the US indexes, where we're looking for a macro higher low to form in these zones. So it's okay if it pulls back after such a massive rally. It's had a massive rally since pretty much near the Q4 of 2022. We want to see this pull back, really grab the liquidity, especially under this consolidation here, so this fair value gap, and then look to base around here and then have that pull up back to higher levels. Okay, so before we see any major upside, we're going to have to see, in my opinion, even more of a pullback than we have now. Okay, so I'm still very bullish on gold, but I am looking for a significant retracement further down, coming back under 1800, back towards the 1750s, and potentially even lower. Okay, so we're going to keep our eye on this as well. And as we come into these levels, if it should happen, the lemon garden will start to transition bullish on gold again, just like we did down here when we were building out this bottoming structure here. We were going all long on GLD and gold miners. We're going to do the same thing down here, and hopefully our patience will be rewarded, and we'll be able to catch a nice higher low pivot and then ride it up to maybe back towards 1800 and potentially even back all the way up towards 1900. Next is silver. So silver, breaking down further, and like I've mentioned in a couple of recaps, silver will have stunted upside because the increasing value of its industrial use case, but it will have an expanded downside results. Okay, so its results to the downside will be increasing over time, as there is an incentive on the industrial level for cheap silver. So when gold goes down, silver will go down much harder, and when gold goes up, silver will go up slower. It used to not be this way, but as the rise in lithium batteries, obviously the rise in use for silver in phones and solar panels increases, that's how the relationship's going to be going forward. So as gold goes down, watch for silver to have much stronger falls. And so far it's been playing out pretty good. It's coming into this steep trend line. Remember, this steep trend line is likely to break. It may not break right now. We came into the zone of it pretty hard. So we may get a little pull up, as gold might get a little pull up. But as I've mentioned in the last recap, I'm seeing something where we get a bearish consolidation and then a breakdown. Now this bearish consolidation may pull up even higher than here and go something like this and then pull down, but the probabilities are very likely we're going to fill out this entire bullish fair value gap right here and look to attack these lows right here, the daily sell side liquidity here, and then potentially look to target the lows down here as well. So we have more downside probably coming if we're going to have increased strength in the dollar over this week and potentially even next week. If that's not going to wane, then we're looking towards sub $20 again. If the dollar is going to subside in strength, then look for a much steeper rise up for silver, probably back towards 21, maybe 20.95. But once you get there, watch for any potential weakness, because you're likely going to see a pullback down towards this ascending trend line, which again is designed to not hold for long term. It's going to likely break, and we're still in the same sort of structure with gold. We made these lows down here. Will we be able to make a higher low anywhere near these zones and then maybe have continuation higher? Okay, so that's what we're watching silver for, just like we're watching gold. All right, now let's get into Bitcoin and we can finish off the recap. So looking at Bitcoin, actually, I still have not finished that one. So let's actually do a new Bitcoin chart. 1 second. I'm still fixing a lot of charts, so I'm still working the kinks out on those, but here's one that's finished pretty much. So Bitcoin, again, trading just under the daily bearish fair value gap. As you can see, it's been kind of wicking into there a couple of days. Today has been showing some actual decisiveness to the downside. So in my last recap, I had said there, I see the potential of us coming up higher first, filling out this fair value gap, and then rolling over, and then potentially even all the way over here towards around the 24,000 mark. But ultimately, whether we hit this zone or this zone, we would still roll over down here to grab the daily sell side liquidity under this level and potentially even under this little consolidation here. Okay, so generally I saw price getting back to this zone. Okay, so now we may not be getting the little rise here. This might have been enough to where we just tap into the daily bearish fair value gap level here and then just start to sell off, especially if the dollar's going to be strong pretty much for the rest of the week. So you may end up seeing Bitcoin just coming into this level, and then once it touches this daily sell side liquidity, starts tapping into that liquidity, then you may get the pop up. And if we do that, then it's going to be a much more standard head and shoulder structure potentially forming here, if this is what's happening, because then you're getting a potential neckline kind of forming here, and then a right shoulder coming back into this daily bearish fair value gap and then rolling over again. If that's what happens, then we're likely going to see a revisit of 19,500, potentially even 19,000, kind of filling out a lot of this bullish monthly fair value gap and a lot of the smaller daily fair value gaps here. So I am watching this very closely. It's still not out of the ballpark that we're going to hold this level for a little bit longer and still pull up. Again, if we still pull up, my opinion has not changed. I'm not seeing us, breaking to new highs. I'm just seeing that we're likely going to make a lower high, whether it's here or whether it's over here at 24,000. Or whether it's right here, right? This little high pivot right here, it's kind of irrelevant. The point is, we're likely going to break down. This is the most likely path at the moment. Now, there is a path I have mentioned in the last recap where we have like 3 drives up, where we're in this ascending channel structure, and we don't want to ignore this parallel channel structure. Now, it's the least likely path, but it is there, where you pretty much have this ascending channel, you break up, and then you take out these highs here, then tap the top of this channel, and then roll back over and come even lower. I don't see this being the most likely path, but it is a path and we don't want to ignore it. And if this happens, I will say that this will likely lead to an even larger drop over a longer period of time. So I would prefer that we don't have this sort of path. But again, the markets don't care what I prefer. You just have to take what the charts give you, and then make sure you're nimble enough to adapt to it and be ready for whatever you can, map out for yourself. Okay. All right, that is it. That is it for the market recap. Hopefully, it was something that you took something from, some value from here. And remember, if you have any questions, the Discord's always the easiest way to get in contact with me, or of course, leave a YouTube comment. I will try and answer them as they come. I'd love to hear whether you agree or disagree. And if you do disagree, please let me know why. I love hearing different people's opinions. It's all welcome here. And if you are interested in any of those services, whether it's the swing trade service, the tutoring service, or the day trading room with me, make sure to check out the Patreon for the details on that, or the Discord. Go always check out the Discord as well. You'll find the details there. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care.